Okay, trading on the Nigerian Stock Exchange has been muted this week as investors digested a slew of mixed earnings reports. Joining us now to discuss earnings from the consumer goods and telecom spaces and the direction of the equities market in the medium term is Obeyemi Ani, Associate Research and Strategist at Codros Securities. Good morning, Obe. Thank you very much for joining us.
Good morning. My pleasure.
So how would you describe the performance of the markets this week?
I think the market, the performance really has been muted. Um, we've seen mixed earnings come through this week. So investors have really just taken time to digest those. With the way fixed income yields are rising, there's a lot of pressure on the market, a lot of portfolio reallocation from equities back into fixed income. So all of that really has, led to the weak activity and slightly bearish sentiment that we've seen.
Let's get into the fourth quarter 2020 earnings that we've seen, starting with the consumer goods sector. We've seen some market bellwethers like Nestle Nigeria and Dangote Sugar Refinery release their earnings. What has been your assessment of their performance?
Yeah, so 2020 was a really challenging year for the consumer goods sector. The effect of the pandemic on, cost pressures and, demand from consumers was really negative. So Nestle, which is usually a strong performer and quite, resilient company, was able to grow top line, but only marginally in Q4, about 2.3%. For the full year, just flat 1%. Driven mostly by beverage sales, so that's the likes of Milo and Nescafe. Surprisingly, we saw that food declined. Food segment is majorly made up of Maggi, but we know that is quite a competitive segment, as management has said. EPS came in down about 14% for the year. This, I think, is the third consecutive decline in EPS. So it just shows you how challenging the environment has been in recent years. EBITDA margin came in at the lowest since 2016. So it seems like a bit of deja vu from what happened, during the last recession in 2015, 2016. But otherwise, cash generation for Nestle was quite strong. Leverage also increased, so they have a new $200 million loan agreement with the parent company. We saw them pay down the previous debt balance earlier in 2020. But this, we feel, is just to manage their working capital with the poor FX liquidity situation in Nigeria.
All right, let's get into results from the sector that actually drove growth in the fourth quarter. That's the telecom sector. The market leader, MTN, released its earnings over the weekend. What are your thoughts on the results and what is the outlook for that sector?
Yeah, like you rightly said, it's the telco sector is really the poster child for growth in Nigeria. MTN came in with strong results, top line up about 15% in the year. But I mean, no company is immune from the challenges in the Nigerian operating environment. So EPS was actually flat at 1%. And this was due to the FX situation. They had to reconstruct some of their agreements with their lease providers. They moved the reference rates from the official rate to the NAFEX, and we saw that was valued about 2 to 3 times last year. So all of this brought EBITDA margin to about 50.9%, which is lower than the previous year. But positives that we can see was that with lockdowns in Q2, Q1, data growth and data traffic was quite impressive. Data revenues came in at 51% higher year on year. So this, as we know, data gives you a lot higher average revenues per user, and really is the future for telecoms and telecoms earnings going forward. But what we liked was that despite the flat EPS growth, MTN actually paid out about 93% of its profits as dividends, or they plan to rather, compared to the guidance that management gave before of about 80%. So, they're trying to compensate investors even though there are challenges in the environment.
All right. What is your outlook for the equities markets over the rest of the week and in the medium term?
Yeah, I expect that trading will continue to be mixed. Investors will continue to digest results. Earnings season isn't over. But, we're keeping a keen eye on what is happening in the fixed income market. That is a major determinant of what is going to happen in equities. We're seeing that investors are demanding for higher rates across all segments of the fixed income market. We've seen the CBN push up OMO rates to around 10% levels to try to entice foreign investors. As a result, local investors are seeing that and also trying to demand higher rates. So in the medium term, we're likely to see rates continue to inch higher in that space, which will be slightly negative for the equities market. But we do not expect that fixed income yields are going to get to the levels that we're used to, of 15 to 16%. So we still see that dividend yields in the equities market, if you compare them to maybe 1 year Treasury bill, will continue to be attractive. For example, Dangote Sugar paid a dividend which implies a yield of about 8.4%, which is a lot higher than what you get in the fixed income market. So if you continue to see yields like that, I think investors will have no choice but to take positive return in the equities market. So overall, at the end of the year, we should still see the market close in the green.
All right, we'll continue to be hopeful and optimistic there. Thank you very much, Ope. We do appreciate your time.
5 minutes.